And let me give a quick word of caution, because all that glitters are not gold. Trading is a very serious profession. It is one of the most toughest profession in the world. If anyone of you think there is some simple methodology that is there to make money in market, sorry. If there was some simple technique, somebody would have already discovered, the world would have known it. Okay? If you are showing seriousness in your current profession, you need to show triple the seriousness in trading. Okay? So all we want to say, trading is a serious profession. The reason is 90% traders lose money. All right? Now, if you and I believe this is an industry which is always in recession. Why? 90% lose money. Overall, the industry never generates profits. How many of you believe that Bollywood is always in recession? 500 movies they make, end of the year, some movies become blockbusters. Overall, money is lost. The industry never generates profit. Still, for the excitement, people come for the glamour, and still for the lure of easy money, people come into markets. Yes or no? There is no holy grail in trading. I don't have any 90% secret formulas to share with you. I just have some super smart systems which are sustainable, realistic, and models with respectable win rate and RR. When I say respectable win rate and RR, it is a level which will not have a significant drawdown. And coming to my trading background, I am successful 100% annually, which means almost every year I have made money. I am 80% successful quarterly, which means out of 10 quarters, I might lose 2 quarters. And coming to month on month basis, my success rate is hardly 50% or maybe 60%. And the fact of the matter is, when the months where I make money and the months where I lose money, there will be a tremendous difference between them. Okay, when I make money, I make a lot of money. When I lose money, I lose less money. That is all. That is the fundamental essence of any trader. All right, so this is my background. I have a very simple mission, friends. I want to take my sizable portfolio at a minimum rate of 25% year on year for the next 25 years, and I want to take my fund 250 times, which is a very sensible target, and I have a roadmap for this also. I am not interested in doubling money every year. Sorry, I know it's unrealistic. Hardly, I don't remember anyone who doubled money every year over a period of time. I am being a very realistic trader. And remember the fact, it is extremely easy to make money in Telegram and Twitter, but it's brutally difficult to make money on the terminal. How many of you understand and accept this and realize this? Anybody with a no, easy in terminal? Posting something in Twitter and Telegram is extremely easy. Why? I am not putting money. 2, I am not at loss. 3, there is no psychology at play. 4, even if the trade fails, I have nothing to lose. I don't sell dreams. I sell truth. How many of you interested in full-time trading? Give me a yes if you are interested and no if you are not interested. The whole purpose of adding this slide is that one amateur trainer in the recent times, proposed many people to take up full-time trading as a profession. If you're already full-timer, congratulations. If you're looking forward for full-time ship, please focus on these 4 requirements. Number 1, you have to be 100% debt free. You should not have a loan ever in your life. Number 2, you must have a minimum of 2 years of family expenses in your pocket. Okay, which means if your family expense is 25,000, you need to have 3 lakhs per year, which into 2, which is 6 lakhs for 24 months. You need to have that much money in your account, because I am suspecting that next 2 years you might not make any big money, and it should not drain your family. Number three, you need to have a separate and exclusive amount for trading capital. Suppose if 25,000 is your family money, keep the 25,000 aside. 3 lakhs per annum, 6 lakhs amount is for family maintenance. It should stay in a separate account. It should always push only 25k into your family expenses account. That will bring down your stress, and there has to be a very separate trading account, be it 5 lakhs, 10 lakhs, whatever you want, according to your thought process. Anybody who is thinking of making a fortune by bringing 50,000 because one lot is only 50,000, please do not come to market, because I am 200% sure that money will disappear very soon. And finally, you must be making profit in part time. If you don't make money in part time, on what confidence you will say that you will make money in full time? Is it not rubbish? If you don't make money in part time, what will you do in full time? You will have more time, that's all. When you come full time, an idle mind is devil's workshop. You will be much more pathetic trader, for one simple reason, that you will not have a salary. A salary less trader and a salary full trader, there is a tremendous difference. This is my personal experience. I have undergone all these things, and I am sharing this to everyone for the benefit of all, so that anybody would not come into this holy profession, fail, and then become a philosopher. Don't go into it. The biggest problem in today's stock market is 90% are frauds. They give all rosy pictures. They give all rosy pictures, but the truth is brutal. All right. Okay. Now, any deviations? Any deviations, you will put your career and future at stake. Don't ever do that. Follow these 4 rules. Can Is that clear? Now let us jump into price action trading. Consider a war zone. How many of you think trading is also a war zone? Trading is a war zone. Why? There are institutions who will fight against you. You are all very small people. Very small people. Nifty 11,900 is a war zone. Nifty 11,800 is a war zone. Every zone is a war zone. How many of you recognize this picture? This picture is from the movie Bahubali. Okay. Now, in a war zone, you think your enemy will inform you and tell you, hey, I am coming, dude, to attack you? Your enemy will not attack from one location. He will not attack at a time. How we will attack, where he will attack, which way he will attack, how many people will come to attack, you have no damn idea. But as an opponent, you must be prepared for all kind of things. Welcome to the world of professional stock trading. Every trader is a warrior. And before you even think of winning the game, winning the battle, the first and foremost thing that you need to do is to understand that this battle is extremely difficult. And the first step you should take is to protect yourself. Save your life for tomorrow. You may win the battle. If you don't save your life for tomorrow, you might not exist to fight the battle next day. All right. Now, so what is price action trading? Price action trading is an art where you trade without any indicator. Okay. You don't use any indicator. No indicator, and no volume also. People might say, sir, volume is not an indicator. I don't mind. Price is the ultimate truth. Okay. Now, understand this whole concept of bull and bear war. This is the foundation for price action trading. Now, let us say market is falling. Where was Nifty yesterday? Where is that? Yeah. Where was Nifty close yesterday? Nifty closed at 10,000, almost 11,000. All right, good. Now there is a buyer. Okay, one of the funds so told his team, okay, how much ever is possible, try to accumulate at 10,000, say 900. An institution thinks that accumulating the market currently at 10,900 is a fantastic opportunity. Immediately his team will put 100,000 quantity limit order, which means he has got instruction that at 10,900 he has to buy. Where is 10,900? 100 points fall. Now what happens? The price, suppose it is falling now. Let's say tomorrow Nifty falls 100 points and the quantity is around 15,000. Don't take the ideal quantities are different. I am just taking some right numbers to in order to explain you the principle and underlying concepts. Okay, now when the price comes to that level, since there is a huge limit order at 10,900, it will react. When it reacts, what happens? 20,000 orders are filled. How many orders pending? Still there is a limit order pending for 80,000 orders. So markets don't move straight line, they do whipsaw up and down. Next time sellers will bring the price and about 25,000 orders will punch on the short side. When price comes into the zone, again it will react. Why? Out of the 80,000 pending orders, another 30,000 will get consumed, and still there are 50,000 warriors fighting the battle. Every order you punch is a warrior. Every trade you punch is a warrior. And next, price will come again with much more strength. And this time, 35,000 quantity will come and attack. Again, price will zoom up. Why? Because there were 50,000 quantity waiting. When 50,000 warriors destroyed the 35,000 warriors and overall 40,000 warriors marched, got consumed. Okay, and finally, what do you mean by that? 35,000 enemies came, around 40,000 from our team defended those enemies. We lost 5,000 more warriors. So overall, how many warriors are pending? Out of 100,000, 20,000 plus 30,000 plus 40,000, which is 90,000. 90,000 warriors have been destroyed. We have only 10k pending warriors. When the price comes back, if by any chance more than 10k warriors come from the opposite direction, you are doomed. Unfortunately, 45,000 warriors came. 45,000 warriors came and they destroyed the pending 10,000 warriors. So this is how an institution play. When price reacts from here, that is a hint for you that there is a strong limit order of the institution here, that is called as a pending order. You should only trade this one. You should not even trade this one and this one and this one. Okay, that's how the concepts of institution work. And remember what happens when price comes back to that zone next time. Since there were 45,000 enemies, they came and casually killed the 10,000 pending enemies. And if any further your army which is behind that fort tries to attack and see if you can push them, you cannot push. Why? Because there are 35,000 available and you hardly go with some 20,000. Who has more orders at the moment? You need to understand the essence of this order flow. Is this concept simple? And let's move into the crux of the price action. Okay, in this concept of price action, let me take a blank sheet. You need to learn number 1, minor and major SR. You need to learn momentum and base candle. You need to learn. You need to learn the 4 basic price structure. And finally, the single engulf FL strategy. Okay, this is my story. Now, so what does it SR mean? SR means support and resistance. All right. Now, let's suppose price is going up. Okay. At one point of time, the price stops and price comes down. What does that mean? That means there were more sellers. There were more sellers than buyers. Simple. If somebody is pushing you, your opponent is strong. Sellers are strong, so push the price back. When price stops somewhere, when price stops somewhere and reverses from that point, that is called as a minor SR. Okay. Now let's say next time the price again from that point goes up, stops somewhere and stops the price there. When it stops the price there, if it react from there also, what is that called? That is also a minor SR. Why? Price stopped there. Simple. Wherever price stops and reverses, it's a minor SR. Now, in case the price goes back to the same point and reacts from that point again, it becomes a major SR. What is SR? SR means support and resistances. Support is your this. If this is your building, if this is your building, this is your roof. You jump to the roof will hit you hard. That is your resistance. If this is your floor, you fall on the floor, you can't go below the floor. That is your support point. Of course, if the roof, if the roof opens up, you might fall on the ground floor also. So don't forget that. Everyone understand that? So minor SR and major SR, in simple words, they are nothing but the places where prices stop. The places where prices stop. Now price can stop anywhere, and if the price by any chance stops, for example, price is going up, okay, and price is coming down, prices come back, and this is a minor SR. Why? Because price stopped there. Simple. Now what happens when this price again goes and stops at the same point? In your language, it is called as double top or double bottom in traditional price action theory. When it goes and stops at the same point, it is a major SR. Major SR means major fort. The fort is powerful. Whoever is going to that fort, you are destroying your enemy. What is this? This is a fort of your enemy. You go there, he kicked you away. This is the again you go to the same fort, he kicked you away. What does it mean? The fort is strong. Whenever there is a major SR, when the price is stopped at a point multiple times, what does it mean? He is superiorly strong. Now, if somebody goes up to that point, next time, have a fight with him. Imagine the Kalakeya army in Bahubali cinema. Have a fight with him, and finally Bahubali will emerge victorious. Then this fort no longer belongs to the sellers, it belongs to the buyers. Yes or no? How many of you understand this? This is the simplest way I can explain. There was a fort where you went and fought, your enemies pushed you away. Okay? Then the moment they pushed you away, you know, boss, this is a minor SR. It is a minor fort. So you thought it's a minor, I'll attack again. You went and attacked second time, he again kicked you out. Then you realize, boss, this fort is not minor, it's a major fort. Once you realize it's a strong major fort, then you put a better strategy. You might have You went and attacked with a much bigger force, and initially you will have some bottlenecks, and eventually you destroyed that fort and move ahead. When you destroy a fort and move ahead, what you will do? Don't you think that enemy fort is no longer belonging to the enemy? You have captured it, so you are the owner of the new fort. Yes or no? At that point of time, that fort belongs to you. And tomorrow, if enemies comes from the top side to push you away, when it comes into your fort, you will defend the fort. The fort will take care of the enemy, because the fort has sufficient number of your people waiting there. Everyone understand that? So that is the concept of SR. Now quickly I'll show you in a chart. Okay. Now look at this. I don't want Viratek. I want NDP. I need a blank chart. I need a blank chart with okay. This is one chart. This is one beautiful chart of Nifty, Bank Nifty. Okay, I'll take an hourly chart for example. Like maybe 15 minutes also, why not? This is better than. How many of you accept that this is a minor SR? Is it not a minor SR? Price went there, it stopped there. Simple. Everyone understand that. How many of you accept this one as a minor SR? Why? Price stopped there. Simple, very simple. Now, how many of you accept this as a major SR? Why? Price stopped there once, price stopped there 2 times, and price even stopped there 3 times. It is a major SR. Why? That enemy fort is strong. There are more warriors waiting there. The enemy will hit you hard. Once you, next time you go, for example, next time you go to that level, okay, you go there, for example, and then go above, fight with him for few days, and finally eventually zoom ahead, then this fort will become yours. This fort is no longer a enemy fort. It is your fort because you have captured it. How many of you get that? Okay. Now let me get into the next crux of the story. All right, so select, delete everything, gone. Okay, there are only 2 kinds of candles. How many of you know candlesticks? How many of you know candlesticks? These are all candlesticks, correct? Okay, so many candlesticks: dojis, evening star, hammer, the 3 crow, 3 sparrows, pin bar, that bar, this bar, soldier. We don't want any of these things. They're all there to just complicate the whole story. You don't have to know anything. All you need to know is only 2 candles. Candle 1 is called as a momentum candle. Candle 2, which is called as a base candle. That's all. There are only 2 kinds of candles. Okay? There are only 2 kinds of candles. Now, this candle, this is called as the body of the candle. This is called as the body of the candle, and the top, the distance between the high and low, is called as the wicks. You call it wicks, you call it shadow, you call it tail, everything is same. How many of you realize that this length of this body B is greater than the x plus y combined? Everyone get that? How many of you understand that the length of the body is greater than the sum of the length of the wicks? And how many of you realize that this chotu body is smaller than your 2 wicks? Here body is less than x plus y. Very simple, and only two types of candles. There is a momentum candle, there is a, now I have an interesting update. Okay, for example, if this is filled by a red color, it is a bearish momentum candle. If it is filled by a green color, it becomes bullish momentum candle. How does it differentiate? Depends on where the price closes. If price closes above, it is a green candle. If price closes below, it is a red candle. People who don't understand candles, go back to YouTube and study, because that is not my purpose of teaching. Everyone understand that? Is it very simple? There's only two candles, momentum and base, that's all. Okay, now when the color is green or red, okay, when the color is green or red, it will tell you the direction. But in your base candle, this candle is called as a base candle, this is called as momentum candle, and this is called as how do I pick my color? Black. Momentum candle, and this is called as base candle. What is the difference between the two? The difference is, in the momentum candle, the domination is crystal clear. If the color is red, you know the bears are under control, and if the color is green, you know the bulls are under control. Okay, somebody says, sir, you are telling long bodies are momentum, short bodies are base. Perfect. It's simple. And now what happens? So there are only two kinds of momentum. One is a bull candle, one is a bear candle. That's all. Nothing more. And remember, the color of the base candle is insignificant. The color, if it is green color or red color, I don't care. Okay, so technically this is bullish momentum, this is bearish momentum, this is the base candle. Finished. The base candle can be green or red. Why? Because you don't know who is ruling there, whether buyers are dominating, whether sellers are dominating. So color is of no significance. In case of a momentum candle, it's very clear. You know, bulls are fighting, bulls are winners. In case of bearish momentum, it's clear, bears are winners. In base, there is nothing. Can everyone give me a check if you have understood this? Let me go into the crux of the story. Strategy is still there. Superb. Very good. Now, let me delete everything and let me go to the next story, which is the basic price structures. Okay. Yes. Take a pause. Now, the simple thing that we need to know, there is only 4 basic price structures. Base candle, is its doji? Yes. A doji is also a base candle. A doji is also a base candle because your candle can be like this, which is a base candle, but this is not a doji. Why this candle is base? The body, the length of the wick is much more. Your y is equal to 0 here. There is no wick at the bottom. What does this mean? if it is a bull candle by any chance, oh, it is nothing but open is equal to low. But this is doji. This is doji. Everyone get that? This is a doji candle. Okay? Okay? So which ideally means doji is also a base candle, but base candle need not be a doji. Okay? So mystery, have some patience. Everybody is not qualified like you. So there is a time. Okay? All right. Now I am coming back to the next quick price structures. There are only three kinds of price structures. Okay, so we have studied minor SRs. You have studied the kind of SRs. You know what are momentum candles. Okay, you also know what are base candles. And quickly, I want to teach the three basic candle blocks. Only these three things can happen. The price can rally, the price can drop, or the price can be a base. In case of a base, red or green, nobody cares. Is it clear, friends? Now, let me talk about the four price structures. This is what most of the supply demand traders teach, which is a rally base rally, a drop base rally, a drop base drop, and a rally base drop. How many of you understand that this is a bullish pattern? This is a bullish pattern. This is bearish, and this is bearish. Why? What is actually happening? Price is going up. Bulls are fully under control. Suddenly price stops fighting. Bulls and bears are fighting for dominance, and finally bulls win. So definitely this is a bull phenomenon. Then what happened? Price is falling down. Bears are fully under control. Then suddenly price stagnates. Fight for dominance. Nobody wins, and eventually the bulls won the game. So finally who won is what is important. So this is a bullish pattern. Similarly, bears under control, tug of war, bears dominated. Bulls under control, tug of war, finally bears dominated. So at the end, whoever dominates is what is the key point. Whoever dominates at the end will define whether it is bullish or bearish. So the first two concepts are all bullish patterns, RBR and DBR, and the next two are bearish patterns. Okay, now I'm going to take you through the most simplest concept of the power patterns. There's something called enhancers. I don't have time to discuss about that. There are 8 enhancers. Okay, you guys can go ahead and Google it, try to figure it out. What does it mean? Make sense, try to make some meaning out of it, so you would get an experience. Now I want to teach the power pattern flag limit and show how it works in an intraday scenario, because that is the whole purpose of the day. Price is coming down. There is a minor SR. Why? Price stopped there. Correct? When price stopped there, what does it mean? The bears were under control. Next, what happened? The bulls went ahead, break that SR, and somewhere it again reacted. That's a minor SR again, a different level. Second time, when bulls go, fight out the enemies, they were kicked out. The fort is strong. It is a not a minor SR anymore, it is a major SR. You have already studied that. Now what happens? Now again next time, 2 times the price has been kicked out. Your enemy is strong. Now you are going ahead towards the zone, towards that level. Okay, again there was a bull. Nobody stopped them. You are equally strong, and finally when you go to the level of the fort, There is a tug of war. There is a fight for dominance. You're fighting equally with the opponent, but eventually you found out that your opponent does not have the ammunitions that you have, the strength that you have, and finally you won. When such a thing happens, when the tug of war happens at a major SR level, and that base gets formed at that line, which clearly shows that there is a clear war, and that war is eventually won by the bulls, and that is called as a flag limit zone. And when second time price comes back into that zone, we take a trade. Let me explain in simple words what actually happened here. It is very simple. You went ahead, a strong enemy kicked you out, and second time you went ahead, you know that the enemy is strong. This time you went well prepared, you destroyed that enemy, you captured this port. Okay, this is no longer seller's port, this is a buyer's port now. Why? It has been broken. When again price go ahead, the enemy will have another fort. You got stopped, you got pushed down. Now you thought enemy is, this is a minor fort again, let me capture that minor fort. Then he goes against to that point, he again gets kicked out. Then you realize it is no longer a minor fort, it is a major fort. And then you go well prepared, in a strong way you moved ahead, in a strong way you marched ahead. When you exactly comes towards the fort level, there is a huge tug of war. That base candle signifies that both you and enemy fought with equal rights, and eventually there was a momentum green candle which proved that who won? You won. What does this mean? This major fort of the enemy is no longer a major fort for him, it is your fort, it is the buyer's fort. So what happens? You think when you, suppose let's say some 10,000 enemy warriors from your gang went here, fought, let's say around 2,000 died. You think you leave the any fort blank? Would you just leave a vacant fort and march ahead? No, you might leave some 4,000 people here, and another 4,000 people may go up to fight the war. So then what happens? If enemy comes back, you have already captured the fort, you have kept good number of people there, they will push the enemy away. That is the art of pending orders. That is the art of pending orders. Okay, now I will go inside the inside the charts, and I will show you how you can apply that. Okay, and here is my message to everyone on this single engulf theory. Okay, so point number one, if you are trading on stocks in intraday, don't go behind a 15 minutes candle. If you are trading nifty, don't go beyond 5 minutes. If you are trading bank nifty, don't go, you can even trade 1 minute. In bank nifty gives beautiful trades even in 1 minute, and I will show you. Everyone understand that? But volume came, then it's possible, isn't it? No, I will never see volume. The behavior of the price itself will tell me how the volume is emerging. That is the beauty of price action. Okay, stocks 15 minutes candles, nifty 5 minutes, bank nifty 1 minute. So let us experience it. Delete all studies, go to symbols. Okay, now let us take ACC. I'll go to 15-minute candle. All right, now how to study, friends? Somebody says, sir, you mean to say for stock 16 minutes not to be taken, you want to trade an hourly, then you call it an intraday trading? You should get your trade in that 6 hours, right? Okay, understood. The reason why I don't recommend 15 minutes lower than 15 minutes is because you might not get liquidity at all. Suppose you go 1 minute, this is at least better. For example, some stocks, if you go, see, There is no liquidity also. What you will trade? You can't predict. You don't get any price action there. So that is why for stocks I strongly recommend 15 minutes. That is much matured. Okay. Now let us go to this first chart, that is ACC. So we are ACC 15 minutes. Now very simple. Take a straight line. Go to the nearest SR line. Everyone think this is the nearest SR line. This point. Correct? That is a minor SR where price reversed, but that was not broken. Remember, your trade appears only when an SR line is broken. The next SR line is this. That is also not broken. Everyone understand that? I'm just going reverse. I'm just going reverse. And the next SR line is this. And that is broken. Where? Here. When it is broken, just check if it is how it is broken. When it is broken, just check how it is broken. Do you see a doji at the line of SR line? See, here there was a doji. Correct? This is the SR line, right? How many of you get that? This is your SR line. On the line you have this doji, which clearly shows there is a clear fight, clear war between everyone. Okay, yeah. It is broken with large momentum candle. Alright, so I have a solution here. If it is broken with large momentum candle, go to a smaller time frame to check how it has broken. Even in a smaller time frame, it is a momentum candle only. Many times what happens, if you go intraday, you might even get that clearly. Okay. Anyway, to avoid confusion, I'll stick to 15 minutes. So you're not going to take, there is no flag limit trade there. Okay. Chodo. Now let's move on. Where is the next SR line? This is the next SR line. Even that is not broken. This SR line. Correct. The next SR line is this. The next SR line is this. But it was broken, but it didn't travel. It didn't traverse big time. Correct? Now, the next SR line is this. This guy. And that is broken. How many of you get that? I'll delete everything now. I just wanted to show you how you travel through the levels to get your trade. This is an SR line which got broken, and at the time of breaking there is a base. It's a drop, it's a drop, base, drop. So theoretically, if you mark that zone, okay, see what happened. Price came down, went inside and gave a reaction. How many of you understand that? How many of you understand that? Okay, there are so many other enhancement factors which we cannot understand, which we will discuss in later sessions. I will take another try to get a better picture. Okay. Now, so who is this guy? Look at this guy. Is this an SR line, everybody? This guy. Why price stopped there? Price stopped there, SR line. And can you notice that there was a rally, base and rally? So if you can mark that base, how many of you get that? Price just came. Of course, you might not have got this trade. It almost came closer and reacted. If it had come couple of pips below, definitely it would have been a beautiful trade. Is this a beautiful flag limit? How many of you understand? The story here is the same. What happened? The price went up, came down, it formed a minor SR. Then price went up, while going it formed a momentum, base and finally strong momentum. And the above base is not a base, it is actually a bull because it's a gap. Okay, it's actually a gap. A gap is also a momentum candle. So the base is taken. Okay, this base is taken as reference. Price comes, kisses that zone, moves up. What does it mean? When you march ahead, you left your people there. You left your army there and you went marched ahead. Once, even if your enemy hits you, when they come to that zone, your people are inside that fort to protect you. How many of you get that? Okay, so that's how it works. Now let me go to another chart. Here is an SR line, never broken. Come back, SR line, broken. But there is a base. It's a very big base. It's a very bad base. So we will never take such a trade. All right. Let's see this one. See here there is a flag limit trade. Can you see this SR line? How many of you sees this? Price stop there. How many of you see momentum, base, momentum? Is it cute? Put a rectangle at the base. See what happened. How to decide stop loss? Simple. The bottom of the base is entry, the top of the base is stop loss. So this is my entry. This is my SL. This is my stop loss. This is my entry in case of a short trade. So where is the trade? See what happened. The same story repeats. It's a beautiful price action which repeats again and again. There is an enemy fort, reacted. Enemy fort reacted. So you went back, you bought your army. Your army came smartly, tug of war, went down, came back into the army again, reaction. So you got your target. Always look for 1:2 minimum in intraday. In positional, anything less than 1:3 is not good. In positional, I generally take 1:3 to 1:5. I teach 1:5. I teach 1:5. And there are ways to make more RR. As a trader, I don't even care about winning and losing of a trade. That's how a trader matures. What matters is risk and reward. I'll give one more beautiful example. Look at Ambuja Cement. Okay. Look at Ambuja Cement. Okay. So again, go behind, left to right. Simple. Take a straight line. See wherever it is broken, go behind in time. Okay, this SR line not broken. This is an SR line which is broken. See? Everyone accept that this is an enemy fort. Minor SR. Momentum. Two bases. Finally momentum. So what I did? I marked the base. See the trade? Where is the trade? Trade is here. Price comes down and goes inside. You take an entry. The top of the rectangle is your stop loss. It gave a reaction. You book your profit. For example, this risk is how much? 0.9. So how much RR it gave? Minimum 1:2. That's it. It can give more also. Okay, it's almost gave 3. More, it's 1:3. There are a lot of guidelines. There are a hell lot of guidelines in order to look for better flag limit. Okay, flag limit itself is a very vast topic. It takes one day to go deep dive on flag limit, where to put, what kind of bases. There are a lot of stuffs, but just try to get the concept. Now let's go Nifty. There's a question, what after that it breaks? If it hits a stop loss, it's a stop loss. Why are you worried? We are not telling we will get 100% win rate anyway. Even with a 30% win rate, you can go. You can have a very successful strategy without a maximum drawdown. So to have more RR, it is an art. It is a science. So what is the time frame for Nifty? Nifty is not 15 minutes. We go to 5 minutes. Simple. Same thing I repeat. I go back. Not broken. Not broken. This is broken. This is a beautiful story. Look at this. Everyone understand that this is where price stopped. Minor SR. Price stopped. Minor SR. Now what happened? There is no rally base rally. There's only one momentum. So according to our theory, it is not a trade. But wait. Wait. It broke with momentum, we ignore. But generally what I do, I go to lower time frame. Okay, at least in Nifty. Okay, you get your SR. Your price stop there. Now see how your SR looks. Can you get that? 2 times. Your minor SR in a higher candle is become a major SR in a lower time frame. Now look at the base. I see a cute base here. Yes or no? If you take body to body, you got an entry here already, which gives a phenomenal result. Chodo. Let's say you didn't do that. Why? Because the risk is how much? 22 points. Let's say I don't want to take more than 10 points in Nifty. So I'll only take the base. Instead of taking the high of the candle, I only take the close of the candle. What is my risk here? 12 points. Now see the beauty. Did it react? Did it give you more than 2 times? 12 3 is a 36. It gave more than 1:3. This is yesterday's trade in Nifty on a 1 minute time frame. Everyone understand that? Yesterday Nifty gave a beautiful flag limit. So there's a question. So sir, you are saying you have to wait for this kind of setup in live market. Price action is all about waiting. The tiger will wait on the riverbed for 4 hours to catch its prey, but it catches its prey in 4 seconds. Okay, so what is the crux of that? The 4 seconds is not the big deal. The 4 hours of waiting gave the animal the food. Price action traders are very level based traders. We don't take trades wherever we want according to our fancy. We want a clean setup. Clean setup. Everyone understand this, friends? Okay, so 5 minutes I did take a trade. I didn't ignore that momentum. I just went in a lower time frame to check if it forms exactly at that point a base. There's another beautiful question, sir. If that is the case, how do I select which stocks? Intraday price action traders don't have a scanner mechanism. This scanner mechanism is a joke. 90% of scanner based traders never win. Stick to 10 high beta stock which are always volatile in nature, which have a very good daily ATR. Play them. That's all. Okay. Now let's me see this SR line. Is there anything interesting for us? Okay. No. The breakage is a momentum candle. Nothing there. Chalo. Let us check Bank Nifty. I told Bank Nifty we play 1 minute. Can you guys make out how beautiful Bank Nifty is even in a 1 minute candle? This is the whole reason I recommend 1 minute only for Bank Nifty, because of the beautiful liquidity and the length is so high. Bank Nifty is at 28,000. There is a reason which I am telling, friends. Do not go below 15 minutes with stocks. It will give you horrible whipsaws. And don't blame me later. Okay. Now, let me go through Bank Nifty step by step. This is an SR, not broken. This is an SR, broken. And now we are in moment 1 minute candle. I cannot go further down. Okay, I need to have a clear structure there. Okay, look at this. Does this qualify? This is the SR line. Of course, this is, I am marking the SR so that everyone know where the SR is. You should not ask me. It is broken by a momentum candle. So technically, if it was a higher time frame, I could have gone lower. Here I can't even go further low. So which means this is a momentum. There is no tug of war. I could not find a flip flop or flag limit. Anyway, let's see. Let's see. Okay. Now, any other point? This guy? No. Again momentum. Again momentum. I could not get it. Now I come here. Not broken. Not broken. Okay. Look at this. This is an SR line. Okay. Here the base happened here. Just take the base. I guess you got an entry. Look at this. The low of this candle is 28244. You need to see here. You need to see there. 28244.8. What is the high of this? 28206. No, it just missed the trade. I'm sorry, high. 28208. I'm sorry. 28245. 28245 is the high of the candle. Okay, I'll remove these things. And the low of this doji is 28244.8. 28244.8. Look at that. 28244.28245. Okay, it kissed by 0.2 and gave an entry. How many of you understand that? How many of you understand that? I will rewrite it here. The low of this doji, the base is 28244.8. This guy. And the high of this candle is, how much is the high? Okay, how do I select? The high of this candle is, okay, this guy, 28245. High of this entry candle is 28245. Okay, so think about it. The entry came at 0.2. It gave a kiss. So what actually happened? I'm going to redraw last time. There was an SR line. Of course, the SR line was here. The SR line was broken elegantly. There was a drop, base and drop. After price came down, it went up to that zone, kissed it and reacted and gave its resulting target. Okay, that's beautiful. And of course, there are a lot of many intricate aspects here, which I can't explain. All right, so let me pick up this candle. High is 256, low is 244. So 12 points is the stop loss for this game. Should we select major or minor SR? Even minor SR works. If major SR, be more happy. The entry should be taken when the momentum candle comes back into the rectangle that is formed by the doji. The rectangle that is formed by the doji. Okay. So minimum 1:2, definitely it has given. See, risk is how much? It is showing how much? 14 points. 14 2s are 28, 14 3s are 42. It has given more. 75 points it has given. So 1:2 minimum you should get. Is it demand supply method? It is not demand supply method. Demand supply method is just rally base rally, rally base drop. These are power patterns, then this is the first and foremost power patterns. All right, so everyone enjoyed that. Intraday stocks 15 minutes, Nifty 5 minutes, Bank Nifty 1 minute. And that's what the flip game does. Sir, base candle is doji. We clearly told there is no doji. It should be a base. Doji is also a base, but every base is not a doji. Friends are repeatedly asking same question. Sir, does it work for commodity forex? Price action is universal in nature. It will work across every time frame. It will work across all asset classes in the world. Okay, I guess we did that. Now, do you guys know there are almost 10 power patterns? What you saw is just the flag limit, and it is a small portion of the flag limit. Okay, price action consists of 50 simple to advanced to complex topics stitched well. And whatever we studied today is less than 2%. So price action is that huge. It is a rule based story. It's a mechanical story. It's a systematic story. Okay, it has a process in place. Sir, the best book on price action. In fact, I am trying to write a book. It has been a very painful process. The best book I've ever read on price action is by Allbrooks. He has written 3 beautiful books. And these are the topics that are there in price action. And this is the only topic which we discussed today, and that too partially. Because the flag limit itself, that flip-flop, has a big story. Only this topic we studied. There is lot more topics. Okay, I am seriously thinking of drafting the book. It's midway. I'm hoping to release a good book by end of this year.